This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Taylor from Life Goal Investments. How you doing, buddy?
Let's do it. I'm excited to be here. Thanks for having me as always.
Oh, yeah, absolutely. We've got to talk about the stock market. We've got to talk about the tech wreck last week. Basically, 5 key generals, as people are calling them. Let's see if I can list them off memory. Google, Meta, or Alphabet.
Yeah.
Meta, Facebook. Why do they change names? Just to confuse
It's
people.
annoying.
Amazon, Microsoft, and
Apple.
I would say 4 out of the 5 disappointed. 2 out of the 3, really, out of the 5 had disasters.
Absolute disasters.
Right, absolute disasters. Are we seeing a repeat of the tech wreck and maybe a transition to the real economy? Because you look at the tech wreck, the NASDAQ compared to the Dow. The Dow is only 30 stocks, but it's on pace to have the best month since 1976. It blows my mind, up 14%. What the hell's going on, Taylor?
I'm going to take a victory lap here, by the way, because you asked me which one of these was going to do best and which one was going to do worst last week. And I told you Apple best, worst was going to be Facebook. Facebook's down another 5% today. Facebook's down 72% year to date. That is the ultimate bloodbath. The market has no idea what's going on at the top of the house there, what the direction of the company is. And they're just saying, hey, until you prove to us that what you're doing in the future is actually going to produce revenues and stop costing so damn much money, we're going to sell this thing. That's been what's going on in the short term there.
Let's talk about Meta or Facebook a little bit, because again, I think I texted you over the weekend. I threw a little money at it, not much, couple of grand, 3-4 grand at it. Under $100, 98, and it's already down today like 93 or something, right? So another 52-week low. I think what happened is it's certainly, if you look at the volume, record volume on Friday, right? I haven't seen this morning, but I think what's happening is Wall Street is basically saying too hard. We don't get it. We don't understand, because the underlying business at Facebook's relatively healthy.
Oh, it's a free cash flow monster. It's a free cash flow monster. Absolutely. And I will say something from a user experience standpoint. I spend a fair amount of time on Instagram because I'm putting up stuff on a daily basis. And I honestly like Instagram. So I could see from a user's perspective how they like it. I went on Facebook the other day and I was looking for something. And literally the only thing I saw was ads. There was nothing from a friend or anything. It was strictly ads. So I can't figure out what's going on from that business's standpoint to begin with. And maybe some of the rebranding was needed because Facebook is wilting, it seems, at this point. And I just couldn't figure out why anyone would spend any time on there, just from a user perspective.
Yeah, no, I agree with you. It's really interesting because, again, this is all boiling down to is Wall Street saying it's too hard. And we basically, and again, one of the things I think we're seeing, the All In podcast talks about this a lot, is basically, yeah, sure, it's a public company, but all the control is with one man, right? Zuckerberg.
He has all the
voting rights. All the voting rights. Yep. He can tell everybody else to F off if he wants to. And that's what he's basically doing, is he's basically trying to say is, I have the football. I'm going to go home because you guys don't understand.
I think it scared the shit out of people, pardon my mouth, when the COO, and I'm Sandberg, I think is her last name.
Yeah, she left.
Yeah, Sheryl Sandberg, that's her name. When Sheryl Sandberg left, she was there on the onset of this company. I mean, obviously Zuckerberg started it, but she was there through the massive growth trajectory that it took. And I think, as you read the tea leaves here, it seems like they had a difference of opinion about where the company was going to go in the future. And all of a sudden, the adult in the room has left the building. And so it's like, okay, now who is going to come in and be the moderator for what the heck is going on here? Because it seems like, I mean, it's not like virtual or augmented reality, whatever you want to call it. It's not like Meta's the only one doing it. Apple's got a foot in that game as well, as does Amazon, across the board, pretty much the big techies. But at the end of the day, they're not betting the absolute farm on it. They didn't change the name of the company to Meta, right? I mean, it seems like, to your point, they are as all in as you can be, and they're taking all of that free cash flow monster that they are and projecting it out into another direction where the market does not know whether it's going to work or not.
Yeah, I think what's going to happen in Facebook or Meta very quickly is he's either going to be forced to pivot or he's going to see it just continue to fall. Because right now he's burning $5, $6, $7 billion and going to continue. If you listen to Wall Street, it's like, hey, you can go do your thing, but slow your roll. Right. Stop burning billions of dollars.
right?
on this
And
thing.
as these things roll out, like traditionally over time, what people do is kind of wade into things. And then what you get is one company's wading into something, another company's simultaneously wading into the same area. And what you see is what works and what doesn't work. And you're not the only trial and error balance out there, but they're trying to get so far ahead of this that they're doing all the trial and error experiments, and everyone else is just going to kind of ride the coattails and see what works or doesn't work, and be the massive beneficiary behind it. And it's not to say that it couldn't work. It could. It just seems like it's a long ways out.
Yeah, when you look, you're not like you're not dealt 2 10s in blackjack and the dealer's showing a 6, right? It could work out,
Right.
but you just don't know. Actually of the 5 earnings, you know the one that surprised me the most?
What's that?
Amazon.
Oh yeah, Amazon getting wrecked. Yeah.
Well, it wasn't so much their earnings; it was their forecast.
Right. I think
Their
what's going on-
forecast of the consumer was bad.
So I've heard some discussion on this, and one of the things that I've struggled with a little bit on my own is like, hey, I order a $4 item and it pays, there's no cost to ship it. It comes in a box that's way too big. And it's like, is that always the right way to take, is that always the right way to provide service to someone? Like maybe there has to be some sort of a threshold where this item isn't expensive enough for us to ship to your house for free. My daughter's gadget, whatever it is that we get that we saw was $3, we shouldn't have purchased to begin with, don't get me wrong, but gets delivered in a box that's this big and it costs them $8 to get it here. They did $100 billion in revenue, or $100 billion in revenue, and operated at a loss. Like that's nuts. That's nuts to have that kind of volume. And usually with volume comes efficiency, right? But not last quarter.
Yeah. And again, for me, the forecast about Q4, the holiday season, it was eye-opening, right?
Yeah.
Eye-opening. And then, of course, Google's wasn't much better. I mean, Google's was slightly better.
No. And I think a lot of things, I mean, the actual, the bright spot, I guess, for Amazon on the back end, sorry to go back to that, was the cloud was actually decent for them. That was like the bellwether for them, which was a big concern because a lot of people see Amazon Web Services as the future of that company, or I shouldn't say it that way, as a big growth engine for that company. And that was actually decent. So had it not been for that, it would have been worse.
Yeah, good point. Yeah. There is I think there's 2 things going on in the world right now with these 5 companies. The cloud is slowing down, right? It hasn't reached its peak, but again, it's not the same growth rate is not there.
Correct.
And also advertising, right? Amazon ads, Google has ads, Facebook has ads. You're just seeing all of that come in. So, and then again, back to the earlier point, the Dow is up 14% this month. What is going on?
It's nuts. So here's like some stats on looking at the dichotomy of the world that we're in from an investing standpoint right now. Consumer services, which are the Facebooks of the world, et cetera. I'm sorry, communication services, which are the Facebooks, that sector of the market, year over year are down 18.9% as of right now in earnings season. So they're down 20%. They've lost a fifth of the value. So obviously that and multiple compressions, what's drawn them down so far. On the other end, the Dow has more value-oriented stocks, right? So the Dow's only down like 8% for the year, whereas the NASDAQ's down, what, a third, something like that, 33%, somewhere in that ballpark. So and a little bit less now because it's bounced. But at the end of the day, we've been shouting all year, what has the most interest rate sensitivity? Michael, you're like, Taylor, shut up. You said this 19 times. Growth has the most interest rate sensitivity. So when you're dealing with an economic backdrop of the Fed raising rates, growth is going to take it on the chin. And value has obviously been the huge relative winner. But if you back out, and energy's helped that as well. So energy's been a big proponent of what's happened on that side of the equation as well. If you back out energy from this quarter's earnings would be down 5% on average. And they're positive 2% because of earnings or because of energy. But energy has been such a big winner this year and specifically this quarter that it's actually kept things above water, which is obviously what's helping out the Dow on the other side as well.
Yeah, crazy stuff. Again, folks, the other thing I think is going on, back in the day when I was trading stocks in the early 2000s, we called this the tech wreck. Some folks said it's the real economy coming back. And we could see some of that, right? It's the real economy, right? Value-oriented stocks, dividends. These are things that a lot of new investors haven't looked at. They're looking at them now.
Yep. How much am I paying for every dollar's worth of earnings that the company's bringing in? I'm not going to pay 50 times like I was last year, or in some cases 100, 200 times like I was last year. Let's pay somewhere between 10 and 16 times. And that's what's happening in the market right now.
Yeah, it's going to be wild to see a lot more earnings this week. Ones that I'm looking at, Uber and DoorDash. I want to know what's going on
Yep.
with the consumer in those.
I like
areas.
Airbnb. I actually,
Airbnb. Yeah.
I mean, it's a high multiple stock, so people are still willing to pay up for it. But I just think that's a really interesting company because as I travel around right now, which I have 2 kids, so I don't much, but when we occasionally travel, we don't look at hotels first. We look at Airbnb first because we're generally traveling with another family or something like that. It's nice to have everyone all in a living room rather than in the, the next door over in a hotel.
Yeah. Yeah, this is gonna be a fun week. And again, of course, we get the Fed meeting. We will talk about that in its own. But before I go, where can people find you?
Yeah, find us at Life Goal Investments on Instagram. So it's at Life Goal Investments on Instagram.
And he does daily stuff. Watch it myself. He really helps kind of take complex things and make them simple to understand. Very well done. That's not easy to do, but nice work.
I appreciate the kind words, Michael. Thank you.
You got it.